Congressman, obviously the issue over the SALT deduction going away has created a lot of debate. Blue states are now suing the federal government over the cap on SALT deduction, saying that it is unconstitutional. Would the House Ways and Means Committee consider addressing this for 2.0?
Well, from the standpoint, the tax cuts in these high-tax states are real for middle-class families in a big way. These states are going to fail. This is a gimmick, and what I worry about is that it'll end up landing back on taxpayers. The truth is, high-tax states like New York, New Jersey, Connecticut, California will receive a windfall in their state governments from tax reform. The big question is, do they pocket that in Albany and other capitals, or do they pass it on to their taxpayers? Our point is, pass it on, stop the gimmicks, help their local taxpayers. So
even though eliminating that deduction has caused some individuals to see their taxes go up, you believe that, long-term this is going to change behavior on the part of governors and cities in these high-tax states, get them to stop the spending, or what? And what's the point? Because I know you're all about lower taxes, but because you eliminated that deduction, some people's taxes went up.
Yeah, but remember, we also lowered the rates. We eliminated alternative minimum tax, which in high-tax states like New York could be as much as $10,000 in tax increases. We got rid of that for families under $1 million.
Right.
And so we did a number of things under, in addition to the SALT, that actually lowered those taxes. But at the end of the day, the state is the one in the community doing the property taxes, the sales taxes, the income taxes. They should return this tax windfall to their taxpayers.
So do you think over time that behavior changes then?
I do.
Yeah.
I do. I think the pressure's on states because we pulled the curtain back so that now taxpayers realize how brutally they're being taxed by their mayors and governors and state legislators. I hope they're calling them and saying, lower our taxes, and by the way, pass that windfall on to us.
Yeah, we're taking a look at earnings, obviously, and Morgan Stanley had an effective tax rate of 20.8%. Obviously, the tax cuts on the corporate level have helped corporate earnings, and as a result, many of these companies are buying back stock. They're increasing their dividend. Are they putting enough money into hiring new workers, in your view?
You know, I think they are. I think the biggest challenge these days is finding the workers, and we've talked about this really in half a year. We're starved for new workers in America. We're also seeing companies invest in workforce, in training, in apprenticeships, in development of a new workforce for the future. We think that's an important part of tax reform as well. In fact, that's why you're seeing the House already moving toward how do we train people up, move them from the sidelines and welfare into the workforce. This is a critical, I think, a critical part of maximizing the growth here in America.
Yeah, let me ask you about economic growth, because we're actually seeing the Atlanta Fed raise its expectation for the second quarter to 4.5% in terms of GDP for the second quarter. What's the significance of seeing 4.5% GDP in the second quarter? First of all, are you expecting that kind of growth in the second quarter, and what does that mean for the overall year?
Look, that would be a remarkable number. I don't know that that's we're going to hit that or not. I think a lot of it depends upon, frankly, making sure there's more certainty in trade and tariff issues. I think it's getting that workforce, but there's no doubt our trajectory as an economy is so much different now than it was before. We want to keep that moving in a big way. I still think that the keys to long-term growth is also we need more customers. That's through more trade agreements. Secondly, we need more workers in a big way. Congress, the House Republicans certainly are focused on both.
So what about tariffs? How much will tariffs cut into the 3% growth that we're expecting for the overall year of 18?
It's too early to tell. I think over time it will have an impact. Certainly it creates an uncertainty for businesses. Thankfully, our economy is roaring in such a way it's not having an impact yet. I still think that we can buy time for the president's Chinese strategy to unroll and work. You know, if we get the exclusion process right for fairly traded products, if we're exempting countries that trade fairly with us, I think we can take the pressure off U.S. farmers and businesses and really target it more on the bad actors.
Okay, so you are expecting then at some point, if we see these tariffs, it will cut into growth, though?
You know, I think at some point it's inevitable.
Sure.
The question is how soon are these disputes resolved?
Mr. Chairman, it's good to see you. Thanks so much.
No, thanks, Maria.
Chairman Kevin Brady joining us.